We have got a lot to cover this morning, and all the news for Tesla is outstanding, and the stock is going up like crazy this morning in a market that's kind of trying to decide which way it's going to go. And uh, but Tesla, not so much, is doing just fine. So let's take a look at what is causing all this activity. Number one, this comes from investors.com this morning. Tesla insurance registrations in China totaled 16,000. That is 16,200 for the week of September to 8, up 12% from the 14,400 the previous week, according to data provided by CNEV Post. Tuesday, with 3 weeks left in the third quarter, Tesla registrations in China, a rough gauge for deliveries, are up 25% compared to last quarter and increased 15% versus a year ago. That is a very good trend. Tesla's year-to-date China registrations have turned positive after last week's result and are now up 0.2% compared to the same time frame in 2023. Suggesting we'll have a very good close. Tesla stock advanced 1.7 during pre-market, blah, blah, blah. We'll talk about that more later. Bloomberg reported Tuesday that the European Union, listen to this now, the European Union will tweak the additional tariff rates on Chinese-made EVs, dropping the tariff on Tesla to under 8% versus a prior downward revision to 9%. That's on top of the existing, of course, 10% tariff. Chinese EV makers face higher additional tariffs. So that was good news. Tesla China so far in 2024. Tesla delivered 63,456 vehicles domestically in China while exporting 23,241 Chinese-made vehicles to foreign markets during just the month of August. The U.S. EV giant's domestic unit sales grew more than 37% versus the 46,227 sales in July, but are still down 2% compared to the total for last year. Through the first 8 months, Tesla China has sold 587,436 vehicles, down 6% compared to the same time frame in 2023. Okay, so Tesla China's benefited from continued 5-year zero interest rate loans to buyers, as well as increased government subsidies. Analyst consensus has Tesla Q3 deliveries totaling 458, up more than 5%. Etc. James Catt, however, says China sales keep ripping. My forecast of 475,000 for quarter 3 is still secure. I forgot to ask Brian White if he still thinks we have a shot at 500,000. All right, from Barron's this morning, Deutsche Bank analyst Edison Yu launched coverage, a new guy launching coverage of Tesla stock with a buy rating and a $295 price target. Where did he come up with that? According to FactSet, that's one of the higher price targets on Wall Street. The average analyst price target is 218. The highest is Morgan Stanley, Adam Jonas at 310. Tesla isn't, this is quote, Tesla isn't just an automaker, but rather a technology. Let me try that again. Rather a technology platform attempting to reshape multiple industries, deserving a unique type of valuation framework. It's in a league of its own, represents our highest conviction secular leader, poised to reshape multiple industries across auto, energy, mobility, and robotics. He gets it. It's a bullish call and a change for Deutsche Bank. You launched coverage after Emmanuel Rosner moved to Wolfe Research from Deutsche Bank in the summer to take over for retiring analyst Rod Latch. While at Deutsche Bank, Rosner rated Tesla stock a hold with a $123 price target. That is quite a change. At Wolfe, he has a hold rating on Tesla stock, but no price target. But hold is good. While at Deutsche Bank, Rosner in April downgraded Tesla shares from buy, writing at the time of the lack of a new low-price car would create earnings and cash flow pressure. But Tesla has been working on creating truly self-driving cars for years and hosts a robotaxi event on October 10th. Did you know about that? With a new buy rating, about 41% of analysts covering Tesla stock now have buy ratings. The average buy rating for stocks on the S&P is about 55%. Well, so last night, Elon, he appeared on the All In Podcast Summit in Los Angeles. I'd love to go to that summit since it's so close by. But do you know it costs $7,500 for that 3-day summit? He seemed to really under-promise on Optimus, agreeing that 1 million, the 1 million for run rate for Optimus is about, well, 3 or 4 years away, maybe even 5 years away. He was answering a question rather than making his own statement. I'd be shocked if it takes any longer than 2026 to get to that 1 million run rate. Let's see, 2020, did I say 2026? 2027? Well, maybe. Okay. 2025, we're looking at a few thousand. 2026, maybe less than 1 million. 2027, 1 million. That's possible. Okay. I'm sorry. I misread that. Gary Black says this morning, look, once again, he says some Tesla bulls are misreading the headline. Mobileye is not ending use of LiDAR in their autonomous driving systems. They will buy LiDAR units cheaper from third-party vendors. The quote was, Mobileye has chosen to end the internal development of next-generation frequency modulator continuous wave LiDARs for use in autonomous and highly automated driving system. The decision was based on a variety of factors, listen now, including substantial progress on our 𝐖𝐞𝐬𝐝𝐲-based computer vision perception, increased clarity on the performance of our internally developed imaging radar. And so apparently they liked imaging and radar, number one. Number two, and continuing better than expected cost reductions in third-party time-of-flight LiDAR units. This set off quite a series of comments within the X community, with most of them thinking that what that was really saying is that they're now beginning to recognize vision is the way to go more than LiDAR, but you could read that 15 different ways. This is from Tesla Newswire this morning. You see, there's so much good news this morning about Tesla. A covered prototype of the new Tesla Model Y Juniper has been spotted in Palo Alto. And what does Brian say? Usually that means about 5 to 6 months before launch. So we're looking at, as people have been saying, January, February, we're going to begin to see the Juniper. From TCD, this is it's a real thing. On Tesla's plans regarding semi-truck in Europe, they're just quoting something they found. Tesla plans were revealed when they advertised for a head of business development semi-truck, EMEA, for Amsterdam or Berlin on their career website. And according to news outlet Teslarati, were confirmed by the head of the semi-business development in U.S., Graham Carroll. Carroll told Teslarati, we are taking steps to bring the Tesla Semi to Europe. There you go. Well, after numerous weather-related situations that stopped this launch, the Polaris Dawn has gone up, according to Elon Musk, and successfully is now doing its thing. According to SpaceX this morning, Polaris Dawn will travel to an altitude of 1,400 kilometers, attempt the first commercial spacewalk from Dragon, test Starlink laser-based communications, and conduct a wide range of research on microgravity before returning to Earth and splashing down off the coast of Florida. AJ says this morning, in today's trading, Mercedes is down almost 5%, BMW down 9% on a guidance cut, VW down 3%, Stellantis down almost 4%, and Renault down 5%. If you watched Larry and I last night, we talked a little bit about the collapse of the European automakers, and there you go. I don't know if those, obviously AJ wrote this hours ago. I don't know whether those stocks are down or up right now, but that's what it was reported at that time. AJ goes on to say, I've been warning that these companies are losing market share left and right. Exception was BMW, but I explained before why it was unsustainable. This is Randy Kirk, by the way. Did you hit the like button yet? Don't get lazy on that business. I appreciate that you're even still watching at this point. That does so much for the algo. If you keep watching, if you watch past the first about 7 minutes, it really makes a difference on how YouTube sends this out. So thank you if you're still watching. Anyway, like, subscribe, and then hit notify, and then, of course, join Patreon. Brian White will be with us later today. We've already shot that video. I can tell you it was phenomenal as he takes us through, what did we talk? It was really, really good. I just can't remember what it was. Okay, and then Nicholas Gibbs will be joining us for the good news, which probably, based on the beginning of today, looks like really good news today. Kobesi says this. He says the China real estate stocks are officially below 2008 levels. And he goes in and shows how that's true across the board. He says, what is happening in China? All right, then we had the NFIB Small Business Optimism Index, which you know I put a lot of stock in and think that it's worthy of taking a deep dive. So let's go through it here. The NFIB Small Business Optimism Index fell more. It's been down. They fell by 2.5 points in August to 91.2. That would be over almost 3%, erasing all of July's gain. This is the 32nd consecutive month below the 50-year average. 32 months, almost 3 years now of being under the 50-year. Who's been in office for 4 years? Almost 4 years. This is the 32nd consecutive month below the 50-year average of 98. The uncertainty index rose to 92. That is the highest level since October 2020. The highest level since October 2020. Inflation remains the top issue among business owners, and we're going to be cutting interest rates, with 24% of owners reporting it as the top small business operating issue. But that was down 1 point from July. The mood on Main Street, a quote from NFIB chief economist Bill Dunkelberg, the mood on Main Street worsened in August despite last month's gains. Historically high inflation remains the top issues as sales expectations plummet and cost pressures increase. Uncertainty among small business owners continue to rise as expectations for future business conditions worsen. I can tell you that my Amazon business is in the tank. It's horrible right now. So, I sell several products on Amazon, and all of them are doing poorly. The article goes on to say a seasonally adjusted 40% of all small business owners reported job openings they still could not fill. So this is up 2 points from July. Of the 62% of owners hiring or trying to hire in August, 90% reported no qualified applicants applying for those positions. 56% of owners reported capital outlays in the last 6 months. That's good. And that was up 2 points. A net negative 16% of all owners reported higher nominal sales in the past 3 months. So it's going down. The net percent of owners expecting higher retail sales volumes fell 9 points to a net negative 18%. A net negative 5% seasonally adjusted of owners viewed current inventory stocks as too low. So their inventory is dropping. Their inventories, those who think their stocks are too low fell. So they think their inventories are in line. The net percent of owners raising average selling prices fell 2 points to a net 20%, though, still raising prices. 24% of owners reported that inflation was their single most important problem. And 15% reported lower average selling prices, 34% higher. Price hikes were the most frequent in the finance area, 52% higher. Retail, 47% higher. Construction, 33% higher. Manufacturing, 33% higher. So pretty much across the board, these folks were raising prices. Seasonally adjusted, a net 33% reported raising compensation. Only 33%, okay? Unchanged, but that's in 1 month. Unchanged from July and the lowest reading since April. Seasonally adjusted net 20% plan to raise compensation. That's up 2 points. 9% of owners cited labor costs as their top business problem, unchanged from July. The frequency of reports of positive profit was a net negative 37%, 7 points worse than July and the lowest since March 2010. Among owners reporting lower profits, 31% blame weaker sales, 17% blame the race on the cost of materials, rising cost of materials, 13% cited labor cost, and 10% cited lower selling prices. For owners, so they're caught in a squeeze. Their prices are going up, but they're not able to pass them along. For owners reporting higher profits, 45% credited higher sales, 35% cited the usual seasonal change, and 10% cited higher selling prices. 3% of owners reported that all of their borrowing needs were not satisfied, 26% reported all credit needs met, and 60% said they just aren't interested in a loan. I believe that 3% reporting they needed a loan and couldn't do it was up a bit. And then 4% of owners reported that financing was their top business problem. That was up 1 point. I think that's correct. I think up 1 point on that other one too. Neither equity, that was the end of that story. This morning, neither equity or bond markets seem impacted at all by that NFIB report. As grim as it was, it's unclear to me why Wall Street doesn't seem to play this report, look at this report and give it any consideration. It's 40% of GDP, and we know that the Fed does look at it. But as of a few minutes ago, at least, the market was mixed, but it certainly wasn't down based on the NFIB. According to the 𝐐𝐬𝐝𝐲 letter this morning, he says the U.S. labor market data unreliable. We've been talking about that a lot on this program. Here's some very interesting points. Response rates for key labor market surveys have declined to near historic lows. The current unemployment survey, this is the one where they tell you not the 4.3, but rather the number of added payroll, people being added to payroll. So on that survey, the response rate is down from 63% in 2012. Only 43% of the people that they're calling are responding to the survey now. And then on the population survey, that's the one like 4.1, 4.2, that response rate used to be 90% in 2012, and now it's down to 70%. We know that it's hard these days on these surveys getting people on the phone. The survey for job openings has also seen response decline to just 33% from 65% 12 years ago. First, the BLS releases data using a historically small share of responses to subsequently revise it. Then they revise it as they get more and more missing data collected. And this partially explains things, but we've also seen where these downward revisions month after month after month is a negative. This has happened mostly in situations where the country's going into recession. Okay, well, I think that's enough of that. Let's take a look at where the markets are based on all that information. And what we've got, what we've got right now is, okay, so the Dow is, so things have turned negative. The Dow, which was already down, is now down 233, which is pretty significant. The NASDAQ, which had been up higher, is now still up, though, 49.32. Interesting that the NASDAQ is doing so well this morning. S&P is up 0.33. Tesla, which was up a little more, yes, actually, it was up like over 8, is that still up $6.43. Apple is down. So their show yesterday, people keep talking about it being boring, nothing really there. So down $1.46. The rest of the Magnificent Seven up, although Meta's only up 27 cents. Microsoft, though, up 8.87. What's going on with Microsoft this morning? NVIDIA up only 75 cents. Choppy, looking up and down. Okay, quite a few negative stories out on NVIDIA right now. People are not getting that NVIDIA will be able to get these increases in sales and profits going forward. No, not to say they won't increase their sales and profits going forward, but not enough to justify the stock price. Okay, the Cathie Woods are all down this morning. Last time I checked, we'll look at a second here. The bonds were kind of flattish this morning. Dow Jones, percentage-wise, down 0.49%. NASDAQ up 7%, and the S&P up 0.14%. Tesla up 3.52%, and that's a very good start to the day, and now has started to tick back up in a positive direction again. Okay, let's go ahead and look at those bonds. We have got. Oh, now they're back to looking good. Oops! Oh my goodness. Here things are getting in my way. I'm so sorry. Here, let me go back. All right, now we've got it. All right, so bonds, as I said, flat, almost exactly flat, but under 3.7 now. 3.691. Oh, that is down 0.8 of a basis point. 3.691. So under 3.7. That's a good sign. The 2-year down even more, down 1.3 basis points to 3.654. And that continues to broaden the correct way, the right inversion, not inverted, but re-inverted. How do you say that? The 2-month, 5.2 basis points down. That brings that inversion closer, but still way, way out there. All right, let's look at oil. We got the oil down. Wow. Lots and lots of people saying oil might be going down to 60. Well, Texas Intermediate, 66.27, down 244 this morning. That is 3.55%. Brent is down under 70, as I've been saying for days now. It looked like it was headed to under 70. Brent at 69.49, also down 3.27%. Natural gas back up again this morning, 2.227 or 2.63% up. We have got gold basically flat this morning, but at 2,534. Silver down 0.82 at 28.41. So not looking like it's going to get back over 30 again. Copper down 1.33%, heading back toward, might go under 4. It's at $4.09. We have got the dollar down against both the yen and the euro, 0.38 down against percent. That is 0.38 down against the yen, 0.12 down against the euro. Bitcoin is all over the place this morning. Been up, been down. Right now it's slightly up 30 at 56.9. And there you go. That is the full range of data. Let's go back on the Tesla and see where it is now, up 650. So it looks like it likes being up around $6, $6.50 this morning. That's kind of the average of where it's been up thus far. And we've got the S&P now in negative territory. NASDAQ might be following. It's 10 trending. S&P back up a buck, up 1.2 points. All right, let's one more time. Let me ask you to please remember that we got Brian White's second show coming up later today, and then we've got Nicholas Gibbs in the evening. If you wouldn't mind, if you haven't watched it yet, you do want to go see all the things that Brian had to say yesterday about that show up in Vancouver. Good show yesterday talking about that show. So that would be the card right above. And yeah, that's all I got for you right now. Patreon, joining Patreon would be fantastic. And I guess there's nothing more to say, but thanks for watching, and it's been great talking to you.